Welcome to the Tax Saving Minute. This is the show that teaches you how income taxes work in little bite-sized pieces so you can learn how to save money on your taxes. In Season 3, Freelancer Tax Freedom, we're talking about how you can save money on your taxes if you run your own business. In these bonus advanced episodes, we're going to delve a little deeper into more complex concepts to help your business be more successful. If you want to make sure you don't miss out on future episodes, subscribe to this channel. Today, we're going to talk about the difference between a business and a hobby in the eyes of the IRS. So the goal here is to look like a business if you're a business, to smell like a business, talk like a business, quack like a business, because if you're a business, you get to take deductions. So you have to report your income either way, if it's a business or a hobby. But if it's a business, you can take almost all your business deductions. But if it's a hobby, you don't get any deductions. Dun, dun, dun. How do you know if it's a business or a hobby? The intent of a business is to make money. The goal of a business is to put bread on the table. The goal of a hobby is to have fun. Nom, 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 nom. So how do you know if it's a business or a hobby? The IRS says it's based on the facts and circumstances of the case. Now, facts and circumstances is a fancy IRS term that means it's really more like guidelines. So there are 9 guidelines that they go by to determine if you look more and act more and smell more like a business or a hobby. So number 1, do you conduct yourself in a business-like manner? Do you have books, records? Remember before, back earlier in the season, we talked about books and records and how important they are. Well, here's another reason. They make you look legit in the eyes of the IRS. Number 2, do you spend lots of time making that money? Most people need to spend a lot of time in order to make enough money to have bread on the table. So, do you spend a lot of time, trying to make money at this specific business? Number 3, are you dependent on the income? Do you make enough income to live on it, or do you make enough percentage of your income doing that thing? Number 4, are the losses beyond your control? So it's not that you're just going, psh, I don't care, but other things outside of your control are causing your losses. Number 5, are there personal pleasure? Are you having personal pleasure in doing this thing? Like, is it your boat that you happen to rent out for $50 and you're like, oh, I wonder if I can deduct my $10,000 of repairs on my boat from my $50 one time renting it out to somebody? Yeah, personal pleasure probably would be a problem with that one. Number 6, what is your expertise or the expertise of the people you work with? Number 7, have you had profits in similar activities? Number 8, have you had profits in other years? Like in past years, have you made money in the same business? Or number 9, appreciation of assets. Do you expect the assets in your business to grow in value over time? So these are the basic guidelines that the IRS uses to determine if they think you're a business or a hobby. So basically what we're talking about here is if you're a business, you can take all those juicy deductions. And in order to be a business, you need to have an intent to make a profit. If you cannot prove that you're a business, the IRS may try to take away all those deductions and say you can't claim them. Big announcement, next season, season 4, we're going to be talking about rental properties and different things that you need to know if you're investing in rental properties and how it works with taxes. So if you're interested in that kind of investment, then join us in episode 4 and make sure to subscribe to this channel so you know the moment that it's released. Thank you for joining me for the Tax Saving Minute. I'm Cynthia Umstadt, CPA. See you next time.